Most people would already know me that are here. I am a lecturer in taxation in accounting, finance and economics if you are new to the group or from outside. And today I'm reporting some data from my recently confirmed PhD research. And this in particular relates to whether tax compliance can support cash flow management of Australian small businesses. So first of all, I'm going to look at or discuss why tax compliance research has been a large area of research focus in the last probably 30 years, and in particular for small business. And the reason for that is tax compliance costs appear to be more burdensome on small businesses when we compare those businesses to large. It's been identified that small businesses can realise, however, some benefits from complying with tax. In particular, those benefits can be managerial benefits and also cash flow benefits. But what we need to think about are those benefits of are they proportionate to those that are received by larger businesses? And do those benefits outweigh the compliance costs? So in particular for my research, I'm looking at whether those benefits are helping small businesses with their cash flow management. So managerial benefits are those received that may improve the decision making of the business. So for in particular, regular recording of transactions may improve knowledge about finances, for instance. And in situations when the goods and services tax was introduced in 2000, we saw a large increase in small businesses taking on or using computer accounting software. So the use of computer accounting software was seen to improve reporting and also accuracy of records, which then as a consequence decreased the amount of money, for instance, and time that was required to be spent with accountants and bookkeepers, which also then meant that there was more income available to the small business. The other benefit that could be realised is what we call a cash flow benefit. So a cash flow benefit results in the delay in the receipt of payment of invoices from your your debtors, and the date in which that payment needs to be then made to the ATO. The benefit is based on what possible interest you could earn on your tax liability while it sits in your bank account before it's remitted to the ATO. Generally, well, when we're talking about accounting, we're talking about those that are operating on an accruals basis rather than those that are operating on a cash basis. If operating on a cash basis, it's not capable of, or you're not really looking at whether that is a viable option to be recognising cash flow benefit. So for small businesses, it's been found that cash flow benefit, although it may be realised, it's extremely insignificant. Whereas for larger businesses, they will be able to realise a much higher value in cash flow benefit, particularly when they're extending their trading terms past 30 days, which is a common occurrence in Australia for large businesses where they can take advantage of their creditors, their debtors. So they will extend payments for from 30 days up to 90 days. So when we're talking about compliance costs, the reasons that taxes incur higher compliance costs is generally because they're difficult to understand, they're not simplistic. And when there's more than one rate or it's not a broad tax system, then we end up with some concern about how much the costs will be for small business owners. Reza, did you have a question?
Yeah, I have a simple question, which is when you say they have tax compliance have incremental benefits, Or they do have benefits compared to what? Compared to those who don't pay tax, or compared to, or is it the net benefit against tax compliance?
Are we talking, I said that they can realize benefits from compliance. So you'll have a cost obviously incurred as a result of compliance. When you're looking at those compliance costs in comparison to what benefits you may receive as far as managerial benefits or cash flow benefits, it's about whether one will outweigh the rest. I'm not looking at those that are non-complying and complying. I'm just looking at those that are complying and whether their costs are reduced as a result of any benefits that they may receive. Does that make sense?
Their costs are reduced compared to what?
I think Bruce is pointing about the managerial benefits, Melissa, in terms of.
No. I'm looking at I'm interested in the cash flow benefit. I see that part of argument, that is when you pay GST, you withhold the GST liability on behalf of the ATO for a while, right?
Yes, that's correct.
So that is some cash pot available to you until it's due to the ATO. I can see there is some incremental benefit in terms of giving you some extra surplus cash, right? So is that the benefit? But against that benefit, there is a counter cost associated with, that is, if your goods or services attract GST, the price goes up by 10%.
Yes.
If they don't attract GST, the prices are lower at least by 10%. So in the marketplace, there could be competition implications for this. So I'm saying, are you also analyzing from that perspective? For example, as a small business owner, my query would be whether am I better off paying GST or am I worse off paying GST? If that
depends in the marketplace that you're operating in, and as you're mentioning about what the competition is in the marketplace. So for instance, smaller businesses that are in an extremely competitive marketplace may absorb the GST as instead of earning a profit on those goods and services, because they have competitors that are undercutting. So as far as the cash flow benefit for GST purposes, we're looking at what interest could be earned on that value of the GST sitting in the bank account.
I see. All right, thanks.
No worries. All right, let's talk about why compliance costs are incurred. I think I began already about, they can be higher where tax systems are very difficult, in particular when language and procedures are difficult to understand. They're also driven up by changes in the tax law, which can happen frequently, forcing business owners to revise their knowledge and procedures. Particularly that is with transaction-based taxes like goods and services tax. They're more costly as they apply to each and every transaction carried out, possibly by that business that is complying with GST. So when we look at compliance costs from previous research for micro, small and medium businesses in particular, it can be shown on the slide that for micro businesses, which are those earning less than $2 million, their compliance cost for tax is almost 1/10 of every $1,000 of turnover that they have. So $90.45 in every $1,000 of turnover, in comparison to medium businesses, which is as low as $2.10. So for this research, I focused on whether tax compliance could assist small business owners in understanding their cash flow management. All right, so obviously, all businesses, regardless of type, will be complying to some type of tax system. Were they gaining any benefits that were going to help them manage their cash flow? Because we've known from previous research that tax compliance can be burdensome or hard to deal with from a cash flow perspective. So the reason that the Australian business sector is important is because they do contribute a large portion of income and employment to the economy. So small businesses contribute about 34% of income, which is $1.25 billion. And the small service sector businesses, which I focused on, earn about 1.088 billion of that income. So they're a large representative in the small business sector. They also, small service sector businesses, employ 4,053,000 employees. And small businesses are responsible at this stage for 98.4% of all private sector business registrations. So the businesses that are included in my research are, as I mentioned, from the service sector. And as you can see on the table in green, that includes a large variety of different professions and trades. And so And obviously, for that reason, that is why the income and employment is so high in that group. So the items that are pretty much left out of this research are manufacturing, fisheries, and it's the last one, Brett. There's 3: manufacturing, fisheries. It'll come to me later, but anyway, they're obviously not in the group that is service businesses. So for the methodology for my research, it was a large-scale survey of small service sector businesses in Australia. There were a number of sampling techniques used, including stratified sample, convenience sampling, and snowball sampling. Now, stratified sample was gained through the Australian Business Number Register, where pretty much every 10th business was contacted. In areas excluding, the only territories and states that were not included were Queensland, Northern Territory, and Canberra. And part of that was because we ran out of time, and the other reason for not including Queensland was because the researchers were all based in Queensland. Convenience sampling was where we contacted our professional and industry contacts, and we sent out requests for people to distribute, also using snowball sampling, our survey. Those contacts included professional and small business associations, Griffith alumni, Griffith Enterprise Series attendees, LinkedIn contacts, Facebook contacts, and our colleagues, the colleagues of the researchers. So from there, then they sent the survey link out to all of their networks, which resulted in our snowball sampling. So because of the variety of sampling methods used, I was unable to rely on a response rate and therefore had to rely on a completion rate. So for those small businesses that began the survey, only 116 in total completed the survey, which gave me a 45% completion rate. Now, it should be acknowledged here that that is not, and I'm very aware that that's not very many participants in comparison to the number of small businesses that are in Australia. However, please understand that this is a part of my PhD research, which was a mixed methods research methodology, and there were 2 prior data collection areas before we jumped into the large-scale survey. So the web link or the survey link was administered through SurveyMonkey and could be used on a number of different platforms. So from the data or the participating businesses, they were asked initially what tax systems they comply with. It's interesting to see from the 118 that not one of them complied with, well, we didn't get 118 of them complying with at least one tax system. What is also interesting from this slide is that 77 participants or business participants suggested they had a pay-as-you-go withholding obligation, but only 6 of 60 of them suggested they had a superannuation guarantee obligation. So that means 17 businesses believe that they don't have a super obligation, even though they are paying employees or holding taxes for employees. What's important here is that they would be required to pay superannuation guarantee for all employees, except for those that are either under 18 or those that are and earning less than 30 or working less than 30 hours a week, or those that are over 18 and earning more than $450 per calendar month. So it is likely that maybe some aren't identifying that they have a super guarantee obligation when they actually have, or they're reporting a PAYG withholding obligation when they may not have one. It's also interesting with this slide to look at the fact that only 88 participants suggested they have an income tax obligation. So regardless of what type of business you are conducting, you will have an income tax obligation, whether that is at a company tax, whether you're submitting a company income tax return, or whether you're including the income tax in your individual tax return. All businesses will have an income tax obligation. So that should have been 116. So what we're looking at is that perhaps small businesses aren't aware of what their obligations are. We then looked at also what the frequency of their reporting of these taxes are. Majority, particularly in GST and pay-as-you-go withholding and superannuation guarantee, are reporting quarterly. Those that are reporting monthly, the system that is doing that, well, with the highest number of them, is pay-as-you-go withholding. Most other, for FBT and income tax, it will generally be on a yearly basis, but you will find that some businesses are reporting or paying a pay-as-you-go instalment payment, which is for income tax, or they might be paying a fringe benefit tax instalment, which means they would be paying those instalments quarterly to try and reduce their obligation at the end of the reporting period. So when I mentioned just before about those businesses that didn't recognise that they had an income tax obligation, it shows us that it didn't depend, or it wasn't relevant to particular business structure. As we can see on this slide, that there were business owners that were suggesting even that they were a company and they didn't have an income tax obligation. Now, the only other way I could explain that perhaps is that maybe they thought that they weren't going to have an income tax liability for the year, and in fact they were going to be entitled to a refund. That would be the only other reason that someone might select that they don't have an income tax obligation in that particular year. But as I mentioned, if you're a sole trader, you will include the business income as part of your individual tax return. If you're in a partnership, the income will be distributed to the individual partners to include it in their individual tax return. And if you are a beneficiary of a trust, you will earn income as a beneficiary and include that in your individual income tax return. So we moved on and then looked at whether small businesses were supporting their cash flow management if they had cash flow difficulties over the 10-year period by entering into a payment arrangement with the ATO. So it's important to understand that some recent laws or legislation is moving towards removing the availability to use a payment arrangement to pay off your debts with the ATO. But what we can see from this data is that the majority of small business owners had not engaged in the use of a payment arrangement, which suggests that that's a good thing. You know, well, we hope that they are then fulfilling their tax liabilities without having to source other methods to ensure the successful operating of their business. But 40 participants had suggested that they have used a payment arrangement over a period of time. And what happens with an ATO payment arrangement is once you enter into one, you have to pay a certain value each week to reduce that outstanding debt. And any debts that are incurred after that arrangement is entered into must be paid on time. So if you default on any future debts and paying them when they're due, then this can cancel out the payment arrangement that was in place. Concerning issues for here was, although it's only 7 of the participants, 7 people were unaware that that was even available to them. Okay, so they could have been in financial strife over the 10-year period and not aware that they could have approached the ATO in order to set up a payment arrangement to pay those debts. So then we start to look at whether taxes actually help out in any way or provide any benefit. So the tax systems were, and in some instances the business activity statement were included to determine if small businesses recognise any benefits. So are business records accurate as a result of recording taxes or recording transactions for these taxes? And it can be found in the results that the tax systems that were valued highest was pay-as-you-go withholding and superannuation guarantee. Now, this could possibly be because of the regulation of reporting. So they were the highest two, PAYG withholding first, and then followed by superannuation guarantee, and then GST followed by BAS. Now, when we're looking at the reporting cycle of those individual tax systems, they report much more frequently than others. So, for instance, if you are dealing with employees, your PAYG withholding obligations, you are looking at them weekly if you're paying on a weekly cycle. So, and with the changes in the ATO filing system, the single touch payroll, you're sending that information to the ATO each week if you're on that one weekly payment cycle. So you can see what your outstanding liabilities to the ATO are on a weekly basis, and also for superannuation guarantee, because that is included in the reporting as well. For GST, obviously people will be dealing with GST transactions daily, weekly, and their reporting cycle for small businesses will most often be quarterly. So they're submitting a business activity statement quarterly. They can see what, they make sure that their records are up to date on a quarterly basis for that. We then look at whether reporting tax liabilities by the due date assists with managing tax cash flow. Now, the purpose pretty much of this question was that if you're not paying by the due date, you're possibly incurring interest and penalties as a result. And so therefore, are small business owners realising that if they're paying by the due date and reporting by the due date, that this means that they'll have more money in their bank account as a result of not receiving those penalty notices. So for this question, the goods and services tax and the business activity statement were found to have the highest value. And in all situations, most business owners feel that reporting by the due date is beneficial in comparison to those that do not. But reporting by the due date was not as beneficial or as much benefit to small business owners' cash flow management as what their record keeping was, which was in our last slide. And that could be because obviously reporting then invokes the requirement to make a payment, and obviously keeping money in your bank account for a longer period or forever, if you could, is much more beneficial to a business owner than having to pay it out to the ATO. Another question, and something that's been debated over a period of time, is whether it would be beneficial for businesses to separate their tax liability. Now, in particular, because it's difficult at reporting time for some businesses to find the tax liability or the portion required to pay the tax liability, and experts have suggested that they believe that small business owners aren't capable of recognising how much tax is held in a normal trading bank account. So they confuse the tax portion with the actual income, and therefore will often use that portion to pay other creditors and obligations. So business owners believe that if they could separate the tax portion of incoming cash for GST, income tax and pay-as-you-go withholding, that would have the largest benefit. In comparison, FBT and superannuation guarantee was not seen to be as necessary or effective in comparison to the other three tax systems. And that could be because of the large tax liability that can be incurred under GST, income tax and pay-as-you-go withholding. Also for income tax, for those that are reporting yearly, there needs to be a lot more cash flow management required for that when the reporting period is from 1 July to 30 June. And then for some small businesses, they will need to report by the 31st of October. But for companies, that can extend out to May the following year. So if they're not putting money aside for that tax liability, they could face significant concerns for cash flow at that period of time. Now that sort of runs in sequence with another question that we asked, and I'll talk about that in a minute, about when taxes are actually due and whether that then causes some cash flow difficulties. But one other thing for income tax, and some people would know that businesses can pay what we call a pay-as-you-go instalment, and a pay-as-you-go instalment is paid quarterly, and it reduces your tax obligation at the end of the reporting period. So business owners were asked whether they found a pay-as-you-go instalment useful for their cash flow management. And almost 60% of the small business owners believe that it provided some benefit to them, their cash flow, in paying that throughout the period instead of having to find the income tax at the end of when the reporting period was over and when the liability was due. Only 21% believe that it didn't provide them any benefit, or they disagreed or strongly disagreed. And this could be because they feel that that money is better sitting in their own bank account than sitting in the ATO's bank account. Whether the size of that value gives them some interest over the period of time or the year. At the moment, with interest rates so small, it might be minuscule, but most small business owners would feel that it is better off in their own bank account. Now, the other thing is that if you get to the end of the income tax year and you are entitled to an income tax refund and you've been paying instalments over that 12-month period, then that money would have been of better use to the small business owner than what it is sitting in the ATO's account. Yes, Reza?
Yeah, for the survey participants, did you define to them what do you mean by cash flow management?
Yes. So cash flow management there's a few different things that are included in it, which is in another presentation I could do, but it was about regularity of carrying out, transactions and chasing up their outstanding liabilities, what their record keeping is, what their managerial procedures are in the occurrence of chasing up that income and invoicing, what other things they do to ensure that their money is received on time, as in whether they have automatic invoicing, whether they have automatic statements that go out from their computer accounting software, what their regularity is in contacting creditors. There was quite a number of things that had to be answered.
Okay.
Yeah.
Thanks.
That's okay. All right, so then we moved on, as I mentioned, and looked at whether the number of tax liabilities that a business has to deal with has implications for their cash flow management. And what we found, and I've lost which slide I'm on, sorry. Okay. 45% of businesses suggested that the number of tax liabilities makes it difficult to manage their cash flow. This disruption to cash flow could be because of the higher number of tax compliance requirements in Australia. We have quite a large number of taxes for businesses that must be complied with. And remembering that we're only looking at, I only looked at 4 federal taxes and superannuation guarantee. This may not, that's not the full extent of business taxes. There may be state level taxes. There's also things depending on industry. There could be other requirements they need to deal with, like excise taxes. But we're just looking at these specific 5. And as I mentioned, at least 3 of those have a significant, could have a significant impact or could have large liabilities attached to them. So yeah, 45% of participants suggested that the high number of taxes they need to deal with does impact their cash flow management. And as it can be seen, there's probably 25 participants that gave a neutral response, didn't confirm either way. The date for payment of taxes was also asked of the small business owners. So does the date for payment of tax liabilities have negative impacts on your cash flow? 1/3 of participants suggested that the date liabilities are due causes some detrimental cash flow effects. 37% suggested it didn't have any concern. And the reason this question's asked is because, for instance, the payment dates and compliance requirements for some of the tax systems are overlapping. So, for instance, goods and services tax, if you report quarterly, is due July, October, January and April. Pay-as-you-go withholding is due pretty much every month and is included in those 4 that GST is due. And if we're talking about income tax and only paying yearly, it's going to be due in October, which I already mentioned has GST due in October. FBT is due in May. We have PAYG withholding also due in May. And if you are paying a income or pay-as-you-go with, pay-as-you-go instalment, it will be due quarterly as well with your GST or your BAS statement. So those payment dates can be overlapping and can also cause then significant issues for cash flow. So what I found from the research is, in general, that small business owners value the requirement to pay pay-as-you-go instalment. So the problem we have, and the recommendations I've made, is firstly for new businesses, new small businesses, pay-as-you-go instalments for new businesses. When you complete the documentation to start your business, you have to opt into making pay-as-you-go instalments. So pretty much you don't fall into that instalment obligation until after you would submit your first income tax return, which could be some 15 months after you began trading. So that would mean in the first 15 months, some small businesses are not aware of what their income tax obligation may be in the future. So the first recommendation I would make is that when new businesses are enacted or begin, that they would have to opt out of the instalment payment. So in other words, it's automatically required for new businesses at every 3 months, so that they are not left in a vulnerable position in year 2. Now, because we don't have any trading income for those businesses in year 1, that could be at a voluntary rate of perhaps 20% of income that could be paid as an instalment in the 4 periods of the instalment activity. Or an alternative way it could be dealt with is a portion of income could be submitted to the ATO in that first year, and held by the ATO until that income tax return is filed some 15 months later, which could be at 10%, perhaps 10% of income. Another recommendation from the research is that those tax systems that appear to be dealt with more often and have higher reporting obligations appear to have larger benefits for cash flow. So pay-as-you-go withholding, superannuation guarantee and GST, small business owners felt that they were more beneficial, or they received more benefits from those tax systems than others, and that could be because they're reporting more frequently, and that they understand what taxes are going to be outstanding. Perhaps we need to have intermittent tax compliance requirements for other systems that are generally based on or are yearly based. And finally, the last recommendation is that it is important for small businesses to separate their tax liabilities from their trading income. Now, this could happen automatically or manually. So automatically, it could be sent through something similar to single touch payroll, where it comes, there's a indication at the end of the reporting period or quarter that you've earned a portion of your trading income needs to go to the ATO and sit with the ATO, or small businesses could just separate manually into a separate bank account at a rate of perhaps 15%. There are some obvious limitations in the research. We didn't determine the financial stability of the participating businesses before entering into the research, so we're not actually aware of what their ability is to manage their cash flow, or whether we understand exactly what their individual cash flow methods are. There are questions about whether they engaged in certain methods or not, but we didn't actually go into each business and determine whether their cash flow management is substantial or effective. In the representatives that were part of the survey, there was an overrepresentation of what we call ANZIC category M, which are those that are recognised in the professional, scientific and technical services. And generally, that group are required to have a tertiary education compared to those in other groups. And in that group is also people including financial planners, accountants, tax agents. So we are looking at a group of participants that may have more knowledge of running their business than perhaps other people. We also had a higher representation of tertiary educated people in comparison to those in secondary education, and also a very small number of migrants that had been living in Australia for less than 5 years. As I mentioned at the very early on, another limitation is the sample size of those who completed the survey. The idea would then be in the future to rerun the survey with some slight changes. What I've learnt from the first time in comparison to where I would run it again, with the hope that we could reach different groups and a higher number of participants. And finally, that the research is based on sensitive financial and tax information. So there is a possibility that participants portray their ability of the areas that we've asked them to a higher value or a higher scale than that of actual reality. In conclusion, it was found that the due date of tax liabilities does not cause unfavourable outcomes for cash flow. More than 2/3 of small business owners believe that separating their tax liabilities for trading income is beneficial for their cash flow management, particularly for goods and services tax, income tax, pay-as-you-go withholding and superannuation guarantee. And managerial benefits are recognised in the form of maintaining business records and improving cash flow awareness due to recording for tax purposes, particularly for goods and services tax, the business activity statement preparation and the payment of a pay-as-you-go instalment. So that concludes my presentation. Any questions?